What if I told you that the financial world, as you know it, just experienced a tectonic shift, an event so significant it redraws the map of global assets? Yet, it happened with barely a whisper from the mainstream media. We're talking about a quiet revolution, a story where something ancient, something real, just toppled a modern-day empire.
And here it is. For the first time in modern history, the total market capitalization of silver has eclipsed that of Apple Inc. Now, I want you to just pause and really let that sink in. A physical, industrial, monetary metal is now worth more than the largest, most powerful technology company on the planet. This isn't a forecast. This isn't a prediction. This is the new reality. Welcome back to the Bullion Signal Podcast, the channel where we analyze the macro signals to help you protect and grow your wealth. If you find this analysis valuable, make sure you're subscribed so you don't miss what's coming next. Today, we are diving deep into how this happened and, more importantly, what it signals for the future.
You know, this quote really says it all, doesn't it? For decades, silver has been mocked. It's been called a pet rock, a barbarous relic from a bygone era. The smart money was supposed to be in tech, in code, in the digital world. But the scoreboard doesn't lie. This event isn't just a change in numbers. It's a profound challenge to the very definition of value that has dominated our world for the last 40 years. So the big question is, how did we get here? How does a pet rock suddenly become more valuable than the company that put a smartphone in everyone's pocket? Here's our roadmap for today. First, we'll explore the sheer scale of the flippening. Then, we're going to pull back the curtain on a little-known market phenomenon called Ghost Week. This is the mechanical heart of the story. From there, we'll examine the massive disconnect between the paper price of silver and the physical metal. We'll then look ahead to what some are calling an industrial war with the next tech giant in silver's sights. And finally, we'll distill all of this down to what it means for your strategic position.
All right, let's start with the event itself. It's crucial to understand that this is more than just a headline. According to our source material, this is a clear signal that the global economic order is undergoing a fundamental transformation.
$4.04 trillion. It's a number so large it's almost meaningless. So let's put it in context. This valuation makes silver the number 3 most valuable asset class on Earth. It is now bigger than the entire economy of Germany. It's bigger than Microsoft. It's bigger than Amazon. The source is clear. This isn't just a price anomaly. It's a re-rating. It is a fundamental reordering of the global capital structure, moving silver from a niche commodity to a Tier 1 global asset.
And here's the most important part. Why aren't you hearing about this on the nightly news? The source argues it's because this event shatters the prevailing narrative. The story for the last decade has been about consumption, about software, about intangible assets. But this flippening signals a massive, under-the-radar rotation of capital. Money is quietly fleeing the world of things we want and flooding into the world of things we absolutely need to build the future. It's a seismic shift from the economy of consumption to the economy of production.
Okay, so that's the what. Now for the how. How does an asset nearly double in value in such a short period of time? The answer lies in a strange, fragile period in the markets, a moment our source refers to as Ghost Week, where a perfect storm of conditions created a structural failure in the price suppression scheme. So what exactly is Ghost Week? Think of that sleepy week between Christmas and New Year's Day. On Wall Street, all the senior traders, the decision makers, are on vacation. The junior staff are left to mind the shop. Trading volume dries up to almost nothing. The order books, the lists of buy and sell orders, become incredibly thin. The market, which is usually a deep ocean, becomes a shallow puddle. And in a shallow puddle, even a small splash can create a huge wave. And this is the chain reaction that unfolded. A large, but not extraordinary, buy order entered this fragile market. Because there were so few sellers, The price didn't just tick up, it gapped up instantly. This sudden, violent price move triggered automated risk management alarms at the big banks. Those alarms forced the banks, who are massively short silver, to start buying it back to cover their positions. But their forced buying pushed the price even higher, which triggered more alarms, which forced more buying. It's a terrifying feedback loop, a gamma squeeze, where the bank's own safety systems became the engine of their own destruction. To really understand that cascade, you need to understand this one term, VAR, which stands for value at risk. You can think of it as an electronic leash that the banks put on their traders. Their computer models say, we are willing to risk losing X amount of dollars on any given day. But when a price moves so violently that the potential loss exceeds that limit, the system doesn't wait for a human. It takes over automatically and liquidates the losing position. In this case, it turned the banks from predators into prey, forcing them to become the biggest, most desperate buyers in the market. And what this chaos during Ghost Week truly exposed was a much deeper, more disturbing truth. The enormous disconnect between the paper price of silver and the reality of the physical market. This table gets right to the heart of the matter. On one side, you have Apple. Its valuation is heavily influenced by financial engineering like share buybacks. It operates in the consumer discretionary space. You want a new iPhone, but you don't need one to survive. On the other side is silver. Its value is based on raw industrial and monetary demand. It is an absolutely essential input for our entire technological society. It's not a choice, it's a requirement. And when we say production, what are we talking about? We are talking about the foundational elements of the 21st century. You cannot have a green energy revolution without silver in solar panels. You cannot have the AI revolution without silver in servers and chips. You cannot have the EV revolution without silver in your vehicles. Even our most advanced defense systems rely on it. The point the source makes is simple. The world is waking up to the fact that we have an abundance of code, but a severe shortage of the physical metal required to run that code. And this is where the curtain was truly ripped back. The source argues that the official price you see on your screen, the spot price, is a financial derivative, a paper promise. But during the squeeze, what was happening in the real world, with people trying to get their hands on actual metal, told a completely different and far more honest story. At the peak of the chaos, the official paper price of silver on the exchanges hit a high of roughly $72 an ounce. That was the number flashing on screens around the world. But if you called a bullion dealer and tried to buy a 1-ounce American Silver Eagle coin, some were quoting you a price of $112. Now, this wasn't just a high premium. This was what's known in the industry as a go-away price. This $40 difference is everything. It is the most important signal in this entire story. That premium is the physical market screaming that the paper price is fiction. The dealers, the people on the front lines who actually handle the metal, were effectively telling you, we no longer trust the value of your currency. We would rather hold on to this ounce of silver than take your $112 because we believe the real value is much, much higher. It's a complete vote of no confidence in the paper system. So silver has now conquered Apple. But the source suggests this war is far from over. The next battleground is already forming, and the next target is the undisputed king of the AI boom, Nvidia. But this isn't just about market cap. This is about a collision of physical reality. Here's the new world order of assets. Gold remains the undisputed king, sitting at a colossal $18 trillion. But look at the race for the silver metal. Nvidia, the darling of Wall Street, stands at $4.5 trillion, and right on its heels is silver at $4.04 trillion. In today's volatile markets, a gap that small is practically a rounding error. It could close in a single trading week. But here's the critical point. This is not a fair race. The source argues this is a collision course. Nvidia has a fundamental, inescapable dependency on silver. Their cutting-edge AI chips need silver for its unmatched thermal and electrical properties. The massive data centers that power AI are, in turn, powered by enormous solar farms that consume vast quantities of silver. So the irony is, every dollar of Nvidia's growth directly increases the demand for the very asset that is chasing it down.
This quote from the source perfectly frames this new dynamic. It's not a simple competition for capital. It's a hostile takeover of a technology company by a physical commodity. Why? Because Nvidia can write all the brilliant code it wants, but it cannot write 1 ounce of silver into existence. It is physically constrained by its own supply chain, giving silver real-world leverage over its financial valuation.
So, we've covered the what, the how, and the what's next. Let's bring this all home. What does this massive reshuffling of the global asset deck mean for you and your strategic thinking in this new environment?
The source material offers 4 key takeaways. First, if you own physical silver, you are no longer holding a fringe speculation. You are holding a Tier 1 global asset with a valuation that rivals the biggest corporations on Earth. Second, a crucial point. Selling your physical metal back into the system provides liquidity and eases the pressure. It helps the very system that is being challenged. Third, if you look at the historical gold to silver ratio, even after this incredible run, it suggests silver has significant room to run higher just to get back to its historical average against gold. And finally, and perhaps most importantly, despite all of this, the general public is still largely asleep. Your neighbors aren't talking about this yet. This suggests the true mania phase, the final explosive move up, has not even begun. And that brings us to the final critical question that this entire event forces us to confront. As we move deeper into a future defined by both incredible digital innovation and undeniable physical constraints, where does the real power lie? Who holds the ultimate leverage? Is it the person who creates the code, or the person who supplies the irreplaceable metal required to run it? The answer to that question will likely define the next chapter of wealth and power in the 21st century. Thank you for joining me on the Bullion Signal Podcast. If this analysis has given you a new perspective, please like this episode and share it with someone who needs to hear it. And make sure you are subscribed so you're ready for our next deep dive. Remember, the goal isn't to predict the future, but to understand the present so we can prepare for what's coming. The information presented in this podcast is for informational and educational purposes only. It is not intended to be and should not be construed as financial or investment advice. You should always conduct your own research and consult with a qualified financial professional before making any investment decisions. You are solely responsible for any actions you take based on the content of this podcast.